So we've all heard a lot about short squeezes the last couple of weeks. In this video, I want to talk about a different type of squeeze. I want to talk about a supply squeeze in the market for rare earth metals. Now, I know what you're thinking, what is that? Well, in this video, I'm going to walk you through what's going on and then which publicly traded stock I think has the most to gain. If you like this content, please leave me a like and subscribe. So let's start with rare earth metals. What are they? Rare earth metals are just a series of metallic elements found in the Earth's crust. What makes them special are that they have these unique properties such as being heat resistant or making great magnets. The two most important rare earth metals are Nd and Pr that I've got highlighted in orange here. Nd and Pr are used to make magnets, which are then used to produce electric vehicle motors, smartphones, and climate change technologies. What makes NdPr so important is that they are critical in each of these industries. In fact, there's no known alternative to using NdPr in order to produce these goods. Let's just take a quick look at electric vehicle motors to prove this point. Electric vehicle motors, regardless of manufacturer, use the same technology. That is, they use permanent magnets to drive the motor technology within the car. Now, the critical element used to produce that magnet is NdPr, and that's regardless of producer. What this tells me is that in order to produce the electric vehicles that we will need over the coming decades, we are going to continue to rely on NdPr production. So you might be wondering, what's the problem? Well, there's two problems. The first is the growth in demand for rare earth metals is vastly outpacing their supply. The second problem is that there is a significant imbalance between where these products are required in the world and where they're currently being produced. Let's start with the first of these problems. You just need to look at an overview of electric vehicle policies around the world to realize the scale of demand increase we're anticipating. In fact, nearly every major economy has announced some form of electric vehicle push to combat climate change. In fact, electric vehicles are expected to grow at 31% compounded over the next decade. And this is where it starts to get interesting. If you overlay what we think electric vehicle demand will be relative to supply of NdPr, the material we covered in the earlier section, by 2030, electric vehicles will consume almost 52% of the current annual production of NdPr, and by 2035 they will have exhausted all of the annual production of NdPr. Now remember, this is just for electric vehicles, so this would assume that no other industry requires NdPr. If you overlay what smartphones and climate change technologies require, you have a significant supply squeeze in NdPr coming in over the next decade. The second problem is that whilst the demand for these rare earth metals is global, the supply is definitely not. In fact, 85% of the world's supply of rare earth metals exists in China. And the Chinese government has made a concerted effort to increase production and relax regulation. Now, this is not meant to be a political video, but I think we would all agree having so much supply concentrated in just a single country is a problem. For example, what happens if there's a trade dispute or a military conflict? In fact, we've seen what happens before. In 2010, China decided to block the exports of rare earth metals to Japan. This led to a significant increase in rare earth metals and a supply squeeze around the world. We just have to look at what happened the last time to imagine what can happen in the future when the demand for these products has grown exponentially. So you might be asking, what's the solution? Well, the solution is we need more production in the Western Hemisphere, particularly in regions where demand is growing the most. I'll be glad to tell you that in fact there's only one company operating in this space, and that's MP Materials. MP Materials trades under the ticker MP, as you can see from Yahoo Finance here. There are three things that I really like about MP. The first is that they have a very structured plan for about how they will revitalize their US business. For those of you who don't know, MP owns the Mountain Pass mine in California, which was previously called Molycorp and was owned by a company that ultimately went bankrupt. MP is a new business that has been taken public late last year by legendary investor Chamath Palihapitiya. MP's three-pronged approach to revitalizing their US business is focused on three stages. The first of which is to increase their rare earth concentrate production. The second stage is to take this concentrate production and to mine it and refine it on site. The final stage is to produce the final magnets that are used in end user products. MP has already completed stage 1 of this process. In fact, if we turn to page 11 of their investor presentation, we're able to see that they've increased their rare earth concentrates by approximately 3.2 times of their predecessor, Molycorp. In fact, they're currently producing 15% of the global rare earth content. That's a significant increase. The second part of this plan is to produce refined products such as NdPr on site. On the next page of this investor presentation, we can see that they are on track to produce these refined products for 2023. This is the most important stage for me, as right now MP is still heavily dependent on Chinese refining capacity in order to turn its rare earth concentrate production into products like NdPr, which are then used to make magnets. The final objective for MP is to have further downstream expansion. This would involve taking the NdPr that they have refined on site to produce the magnets required in electric vehicle powertrains. This is also the fastest growing segment for MP, expected to make up for close to half of its total downstream expansion in 2030. The second thing I like about MP is that they are operating in an industry with very high barriers to entry, and they vastly exceed the production capacity of their competitors. In fact, MP is expected to produce refined products on site by 2022. This is at least 1 year earlier than existing greenfield projects in the US and 2 years earlier than the only existing mine outside of China, which is Lynas. They're also expected to do so significantly cheaper than the alternatives. In fact, existing miner Lynas needs to spend approximately $350 million in capex in order to produce the refined products that MP expects to be able to do in $170 million. And the cost of new sites in the US are expected to cost several billion dollars in aggregate, with timing very uncertain. This gives MP an inherent advantage. Being the cheapest in the industry, they will be able to produce significantly below the cost of these other producers. And for some time, they will be the only producer of refined products outside of China. The final thing I like about MP is that they have very, very exciting financials. Given this drive to producing refined products in 2022, MP is expecting to grow revenues by 53% compounded over the next 4 years. In fact, most of this growth is coming in 2022 and 2023 when they have delivered their on-site refining technologies. That capex is already being funded, and in fact going forward, capex requirements are expected to be minimal, as they would have spent the majority of this in 2021 and 2020. This ultimately means more free cash flow for the investor, and as we can see here, MP is expecting to be cash flow positive from 2022 onwards. What does that mean for investors? Ultimately, it means more cash flow, more revenues, less capex, and more earnings going into 2023. In fact, MP are expecting 60% gross margins on their production, which is just absolutely extraordinary. The final part of this analysis is to look at whether investors who are buying MP today are getting a fair price. The way I would quantify fair is to look at MP's valuation relative to this future growth, and in particular, growth in revenues, as that is where MP's investment in on-site refining is most visible. That is, as MP has on-site refining, they're able to sell higher value products. In 2023, MP expects revenues to be $415 million. Now, if we were to compare that to MP's market capitalization as of January 29th of 4.98 billion, we get to a price to sales ratio of 12 times. So MP is trading at 12 times 2023 projected sales. So now let's look at how a 12 times price to sales ratio compares with companies operating in the electric vehicle space. I've started with a well-known example of Tesla. Tesla is currently trading at a price to sales ratio of 28.66 times. NIO, another electric vehicle manufacturer, is trading at a price to sales ratio of 32 times, XPeng at a price to sales ratio of 63 times. If we conclude that the average price to sales ratio for the electric vehicle industry is approximately 30 times, to be conservative here, and MP is able to pull off on its investment plans and realize forward revenues in line with guidance, we can conclude that MP's share price can appreciate by 2.5 times to reflect a 30 times price to sales ratio. So to conclude, I think MP Materials is a great investment. They are the only producer of rare earth metals in the Western Hemisphere, and if there is a supply squeeze, they will profit. I also think new investors today are buying the company at a relatively cheap valuation compared to its peers, and there is still a lot of new projects in the pipeline for MP Materials as they transition from mining to making the end product used by EV companies such as Tesla. I'd be very keen to hear what you guys think. Please leave me a comment and hit the like button if you found this helpful.